Good morning, I'm Clinton Griffiths. It's been a disastrous year for cotton producers here in the U.S. First, they were hit by drought, which cut production. Then they watched cotton prices implode. AgDay's Michelle Rook joins us to see if there's any life support for the market.
Clinton, the cotton market hit a two-year low on Monday, but it's had a sharp rally the rest of this week with limit-up closes Tuesday and Wednesday and a stronger day Thursday. So is the cotton market finally trying to bottom? I talked to market experts to find out. Cotton prices have dropped sharply the last few months, with December down nearly 50% from the contract highs. It's been caught in global recession and demand fears, especially in China, with their lockdowns and slowing economy. So cotton has been the doormat of the commodity complex.
Cotton specifically, Michelle, we talked 4 months ago, we're trading at record highs, and now we're trading, essentially below where we were when COVID started.
Payne says the cotton market is so export dependent, and so talk this week that China may ease their zero tolerance policy on COVID could be the catalyst to finally bottom that market.
There's a lot of moving parts, I think, to cotton in the short run here, but China reopening is one of the big keys to getting the merchandise trade moving again, as well as a lot of other factors when it comes to inflation, but I think this is the main one.
He says December 2022 cotton looks undervalued, with drought-stricken production at a multi-year low of 13.8 million bales, which luckily farmers will collect crop insurance on. However, new crop contracts for 2023 need a correction, or the market risks losing acres to other competing crops.
I think you start to look at what is needed for price to incentivize producers in the United States to plant cotton on the margins. I mean, you're looking at 10 cents up. I would think 80 cents needs to be done with $6 corn.
So Payne and other market analysts are hopeful the market is close to bottoming.
Last I checked, the DC March spread was in an inverse, but I do think just for no other reason, we could see this market rally a bit, here short term, if not intermediate term, on the strength of fundamentals.
But it may depend on next Wednesday's WASDE report and what USDA does with demand projections. Speaking of demand, cotton exports were stronger this week at nearly 122,000 running bales. Most of the business was to China, but traders continue to be concerned about demand due to the stronger U.S. dollar to the yuan, lower crude oil prices, and the weaker stock market.